Hi, Kevin Blanch, OptionYourFutures101.com. Monday, October 5th. My trading strategies for the week, for the month, is where I'm at. Focus on gold. Gold is sitting at $13.13 right now. Now, there's a big fight been going on in the last 6 months. Inflation versus deflation. It's never happened, I don't think, in the history of this country. It's crazy. You got this zero interest rate, which intuitively would tell you we're going to have inflation, which we've had nothing but inflation we've had massive inflation over the last decade. Don't kid yourself. What was gold in 2000? 225. What was oil? $10, $15 a barrel. So here we started to deflate. A good type of deflation was going on. It was a healthy thing. The dollar was starting to get strength. The euro rolled in back from $1.60. It had rolled into $126, which intuitively would tell you that commodity price is going to fall. Just like when it went from 80 cents to $1.60. Of course, that's massive inflation. Everything rolls. Gold, silver, corn, wheat, sugar, real estate. You know, it's funny, the only thing that did not inflate over that decade was equity pricing, stocks. You're sitting here with your stock portfolio, even though, say you had some stocks that were trading at $100 and they were still $100, you got killed via inflation. So we got deflation. So everything started to reel in. Real estate's coming down, everything. So you think gold? Well, gold didn't, is it? It's crazy that gold didn't, because of the fears and, well, a lot of different reasons. So when everything started reeling, everything did reel in, but gold did not. I was thinking, you got to get short on gold because, the deflation situation, our dollar's getting stronger. Well, here, that ends. We real clear down to $1.26. We're reeling back up now, $1.36, so here comes inflation again, via a zero interest rate that we've had for 20 years now. We says, oh, lost decade, we're going to turn into Japan. Yeah, lost decade, all right. We're going on freaking, we're heading into the second lost decade. Let's be real. Japan's scenario, what did the Nikkei peak? In 1986 or 87, I think it peaked at 35,000. So we're talking, what, 25 years later? The Nikkei is what, 9,000, 10,000? So that's what happens when we keep this interest rate at zero. So how are we going to handle this thing? How are we going to play this thing? Well, gold. It's awful frothy. And I was thinking about talking to a friend of mine that, I was a teenager in the 70s, and he's an old guy from Chicago, an old floor trader on the CBOE. And we were gambling in Nevada this week, and we were having some serious discussions about this. And he's like, look, Kevin, you remember in the 70s? I says, I do. Gold made that massive move up to 800. And then it just tumbled when some of these governments, so-called sovereign wealth funds, that's a government's money, started dumping. I've been really nervous about this as far as my gold strategy trading and some of my equities. God, at $13.13, some of these governments need money. There is an awful big incentive to dump. I'm just afraid one of these mornings we're going to say, hey, the Russians or the Swiss or the Greeks or somebody is dumping gold. And I looked this morning, we're sitting at $13.13. I'm like, so here's how I'm going to handle it. I'm going to use the derivative market. I like to use the doubles and the triples in the ETF gold markets. I like to use those on one side, and then the other side, I will take a gold stock, a gold equity, and I'll buy the derivative. Take your pick. There's plenty of them out there. It's all kinds of gold companies. Now, granted, their stocks have not risen with gold, so if you're negative gold, I think the best strategy is this. I think buy the double or the triple on the downside. If you're still bullish on gold, don't be ignorant about this. Don't freaking drop all your dime. You've made some nice money. You've made some nice profit. You've done well with it. Just like if you bought the Dow when all this fear. You could have picked up the Dow at 7,000. We're almost 11. So these guys that did not panic out, who held their ground, or went in while these things panicked out, you've done well. Don't lose it. So hedge yourself. And here's what I would do. If you hold gold, buy some puts. Or even buy a little bit of the ETFs on the double. Hedge yourself somehow. That's what I would do. Well, I'll tell you what I'm going to do. I own a lot of Apple. Still bullish on Apple. I own a lot of Philip Morris. I ain't never getting rid of that the way it's going. Unless, I mean, that dividend yield is so beautiful, it's unbelievable. You know, serious wealth. Just making money. I'm a fundamentalist, not a technician. I'm a big-time fundamentalist. I mean, I'm big on forward PEs, big time. You know, cash positions, all of it. Apple is in a great spot. They're making so much money. Their forward PE is low, extremely. I know it's $300 a share, but I think there's some gold and these dash for trashes. People still buying it. Blows my mind. Why? Why? Like I said, I'm a fundamentalist, but that's my trading strategy right now. And I would not get too aggressive in anything right now. You know, I think there's some great buys. I'm still a technology guy. I've been buying IBM all year long. I love IBM right now. They got a strong freaking forward PE is low. You know, they're paying a dividend. Now, I have been on Microsoft just for the reason. I'm not a fan of Microsoft. I've never owned Microsoft in my life, you know, to my own detriment in the 80s, but I owned lots of stuff in the 80s. I really believe you're going to wake up one morning and Microsoft, they have been trapped like kryptonite. They can't break out of this. They're too big. You're going to wake up one morning and they're going to say, Microsoft has decided to divide their entities. Exactly what the Justice Department wanted them to do. And then Bush got in office and that all stopped. But, I mean, be careful what you ask for. You might get it. I think Microsoft equity price would have been 4 or 5 times what it is now if they would have done what they fought so hard against, Justice Department. So that's why I still like it. I think one day you're going to come in, they're going to divide it into 4 or 5 entities. And you're going to own 4 or 5 just. I think that same thing's going to happen to Apple. That's the only reason I'm in this. The only reason. Well, again, let's watch this inflation-deflation thing. I like to really watch the dollar against the euro. You realize that dollar euro was 80 cents, went clear to $1.60. You want to talk inflation? Roll back down to $1.26. That's my favorite one. I watch them all. So let's keep our eye on this thing. You know, let's not give our, you know, I've got a bunch of silver stocks that I've owned, and God, I've been wanting to. I mean, I almost sold Wednesday. I came that close. My finger was on the button. You know, we're $22 an ounce, and I'm like, God, you know, we'll keep jumping, but I think I'm going to get out of my silver position. I think I'm going to do it this week. So, and the money out of my silver position, I'm going to buy more Philip Morris for right now. We need some young companies to emerge out of somewhere, some new technology somewhere, so we can get on some growth stocks, but I don't see any growth stocks out there right now. What's going on in this economy is so ugly. But like I said, to you people who did not panic out, you know, or you jumped in when the Dow was at 7,000, you didn't fall for all this spearing, and you know, you guys have bought gold, you've done well. You know, just be safe about it. Read my site, watch the thing, how to hedge yourself. That's what good real hedge funds do, not these fake ones. Good real hedge, protect wealth. Protect your wealth. It's easier said than done, but you can do it. Use the derivative market. Kevin Blanch, October 4th, 2010.